Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. It was touch and go on Friday after the market bulls came in high numbers after dovish comments from Fed New York President John Williams, wherein Williams stated that the central bankers need to act quickly in the face of slowing economic growth, to imply a rate cut, that is. However, the New York Fed clarified that the comments were not intended to imply specific policy moves at the next FOMC meeting at the end of this month. Williams retracting his comments, the Australian dollar did actually stage a modest retreat from the resistance area of 70, 60, 85, now trades at 38. It is assessed we still are waiting for a break of the midway point at 50 as it holds above there. With the doji also, I would like to see this broken and therefore would increase the potential of a marriage between the two indicators, and the MACD also breaking through the zero, which will confirm a move down towards the region 25. It is assessed that we could see further weakness and look towards the region of 69, 80, 90 and reassess from there. Any advances? Well, my stop's at 90, but however, the retreat from Friday has kept me in just for now. Once again, we back away from the level of 112.95, and after the market staged a significant move, gave all the gains that were made on raising them on Friday, and now puts threat back on the downside of 111.80-90. A break beneath there, I believe there is a lot of stops building up, and therefore could trigger a move down to 110. From a technical point, it is in favour of seeing at least a challenge to 111.80 for the start of this week. Resistance seen at 112.65 and a cap somewhere around 112.95 to 113.30.40. Well, dollar yen rebounds off the level of 107.15.25 after posting a low of 21 on Friday. It is seen from there that the market could actually fail towards the top side as the MACD is still bearish, so the rebound could actually look back to the level of 107.15.25 and reassess from there. Resistance at this time is around 108.45 to 55. Well, from the bullish divergence, we did get the strong move to the pound from that candle, but half of it's been given back. After years of political turmoil and months of failed Brexit deals and delays, this coming Tuesday, Britain will have a new Prime Minister. Boris Johnson is the firm favourite to beat Jeremy Hunt in the race to replace Theresa May, and has promised to end months of disunity within the Conservative Party and guide the UK out of the EU, as he looks also certain to move from the backbench into number 10. However, there is a lot of gripe in terms of people being upset, and at this stage in time we could see Philip Hammond, who is the Chancellor, resign, and also we could see some other members also if Boris Johnson gets the job. From a technical point, a break under the level of 124.65, that was the low nearly on Friday, would see further risk to the downside of 123.50 as a target. Resistance 126.30.40, mine at 125.65. As you can see, after failing to take out the level of the top side of 55, the market plummeted of $32 after posting a fresh high of 52. It is a little bit concerning that the fact the market is breaking down further here from a technical point, and therefore could see a move through 18 and down towards the region somewhere of 1,395 to 1,415 on the wide base. Nevertheless, the technicals are a little bit somewhat negative, so let's see if the market does play out further into a bearish roll. And wrapping up with the oil, I'm a little bit mixed at the moment. Can't really assess where we're going with all the noise that's coming into the market. It was reported that the Iran's Revolutionary Guard Corps seized a UK tanker last week, and that has given a lot of concerns and a lot of height in terms of tension between the two sides of the UK and Iran, and also not forgetting the US. be very careful how you play oil this week. We can get a very trading whipsawed manner. As long as we remain above $54 a barrel, I believe we're going back to 58 as a potential target. But I'm not very strong on this view because of the technicals mixed. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoyed the great start to this new week.